Hey everybody, welcome to another edition of Midas Letter Daily. I am James West, your host. My good friend and co-host Edward Molesky is missing in action as he is pursuing his life as a bon vivant. He's a bon vivant. Anyway, so Ed won't be joining me today, but helping me out on the show today, I'm going to have a nice long chat with Jim Albertelli. He's the CEO of Voxtur Analytics, which I don't know if you've been watching this week, but the stock's trading at an all-time high, based on the announcement by Fannie Mae that they have approved the use of the automated attorney opinion letter, a product which speeds up the process of a real estate transaction by eliminating title insurance in some cases. Anyways, I'll let him do the talking on that. Also on the show today, we've got Galiano Tiramani. He is the CEO and founder of Boxabl, which Elon Musk mentioned in a tweet, so Boxabl is the company that makes the casita. It's a extremely small, tiny house that they manufacture down in Texas, and Elon Musk tweeted that it was a cool product, and so they're doing a Reg A offering, and they raised $20 million in their first week, thanks to Elon Musk's tweet. Amazing the power of the Musk tweet. No wonder he wanted to buy 10% of Twitter. He wants to monetize his power. Also joining us today is James Willoughby. James is the market analyst for the International Tin Association. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at midasletter.com. Here's some audience questions I'm going to answer without Ed, so you only get the benefit of my 2 bits worth rather than Ed's. Thomas Carter wants to know, I'm looking for some books to learn how to trade online seriously. Would you be able to recommend something practical? Thomas, I'm going to have to say that I'm not actually the guy to talk to about books online about trading. And the reason for that is that I'm not really a trader. I'm more of a long-term investor, speculator. And I like to position myself in companies to capture the value increase as they execute their business plan. Whereas a trader, typically a day trader, is in and out in the same day. Swing trader might be in and out over the course of the week, looking to catch the swing in a price as a result of some fundamental event. And trading is one of those words. It's kind of got lots of different meanings. Even every investment is considered a trade. In fact, when you put money into, if I put $10,000 into something and wait 20 years for it to come out at $800,000, that's still a trade in the parlance of the investment industry, though it's not really trading so much as it is long-term investment. And so trading is gambling, gambling is trading. I had a note from a viewer a week ago who said, I invested in Lithium Americas since you posted your show, and now I'm down. Thanks a lot. And that was 1 week after we posted the show. First of all, because we have a guest on a show, it does not constitute a recommendation of any of the companies. In fact, most of the companies we have on the show, we don't invest in ourselves and we don't have an interest in. We're just interested in talking to them and hearing the story to make some assessment as to whether they would maybe be a good investment down the road. But so never construe a company on our show with a recommendation to buy their stock. Secondly, if you're looking to buy a stock and make a profit in a week, that is not investing, that is trading. Or my favorite analog, that's more like gambling. And if you want to bet, go to the casino. At least you get a drink with your wager. So to get back to your question, Thomas Carter, in terms of books to learn about trading, understanding investment and how to succeed is much about understanding human psyche. And so I've got a selection of books here on the back shelf, and none of them are specific to online trading. And the online trading mechanics are changing all the time, and there's so much friction and volatility that I'm just not the person to talk to. Robert Zhu, is it possible for Elon Musk to meet the regulatory requirement of disclosure by using call options to acquire the extra 4.2% shares of Twitter? Robert, I'm not a securities lawyer, and so I can't answer that authoritatively. I can certainly give you my 2 cents worth. And Elon Musk will always push the envelope with regulators, and regulators are always a little bit reticent to impose too much of their will on somebody like Elon, being such a big creator of value for investors as he has been, and employer. I mean, the guy's a stock promoter, so I think he'll comply as long as it suits his mandate, and where their request for compliance sort of digresses with his personal interest, he will push back. So that's as good an answer as I can give you there. Gary Stand says, Voxtur should have been $5 to $10 a year ago. Is the market finally starting to catch on? Gary, as a option holder in Voxtur, I would argue with you there and say that Voxtur shouldn't be $5 or $10 a year ago because it didn't have the revenue to justify a $5 or $10 price. The company has over 500 million shares outstanding, so let's say for it to trade at a multiple of, call it even 10x its current earnings, would be trading at $1 billion. So it's currently trading at 600-700 million. So I think it's fairly valued at this point. If you are going to value it on future anticipated revenue, you might be able to extrapolate a $5 to $10 value going into the next couple of years. But I think the best way to value a company like Voxtur is to strictly on the balance sheet. Certainly quarter-on-quarter revenues are rising in the double digits and have been for the last few quarters, but they still haven't shown to be profitable. Now, you might believe, and I might believe as external shareholders, that the company is going to be profitable, but we don't know that the company is going to be profitable, and so that's why you're seeing Voxtur trading at lower levels right now. And you will see it start to trade higher, I believe, if they demonstrate profitability on increasing revenue. And so that's the story we need to see, is profitability meaningfully growing into the double digits and growing by double digits Q on Q before we start to see double digits in the share price. That's just my opinion. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Also on the show today, we've got Galiano Tiramani. He is the CEO and founder of Boxabl. Galiano Tiramani is back. He's a director of Boxabl. Welcome back. Galiano, how are you?
Hey guys, thanks so much for having me. Happy to be back on your show.
You bet. So Galiano, we talked to you about a year ago. It was in February 2021. And I'm just wondering if you could give us an update on what progress you've made from then to now.
A ton of stuff has happened because we're moving really quickly. But in case people aren't aware about what we're all about, check out the website. On the website homepage, you'll see a house that unfolds from a box. And we have a factory here producing a new type of housing that hopefully can have a big impact on housing affordability. So since I last talked to you, I believe we set up this whole factory that's right behind me here. It's 170,000 square feet. And we basically went from a few prototypes to a fully operating factory where now we're producing about 2 houses per day. We're ramping up and everything's going really well for the business.
Sure. How much does one of your houses cost?
The plan is to retail them for $50,000, and right now we have a really big wait list, so it's going to be a little while before anyone gets any of the houses.
So this is obviously capitalizing on the movement towards tiny homes.
Tiny homes is definitely where we're starting at. We plan to eventually have a building system where different size room modules with different interiors, like a kitchen box or a bathroom box, bedroom box, would all stack and connect to build any different type of house, so that hopefully we could build 1,000-unit apartment building or a single-family residential, or all the way down to this little casita that you see on our website. It's basically a studio apartment. It's got a kitchen, bathroom, bedroom, and a couch, and it's about 20 feet by 20 feet. And the idea was to start simple with this first product and really perfect it, and that we would target that towards California, where you have these backyard accessory dwelling units that have been kind of legalized in every backyard in the whole state. So there's a huge amount of demand for that product. But what ended up happening was we didn't sell any to California or for any tiny house use cases just yet. The first customer that came in was the United States federal government. So we're just actually finishing up an order for them of about 156 houses that we'll be finished with, in about a month or so.
The federal government, that's interesting. So is this got like a potential to be sort of like the emergency housing? What's the agency that takes care of everybody when there's a huge disaster?
So that's FEMA.
FEMA.
And we definitely think that it's possible they may be interested to purchase these in the future because it makes a lot of sense. These would be like rapidly deployable emergency shelters. But the ones who bought it, the current order is the military. So they're using it for military-based housing.
Would you say that one of these casitas is a comfortable place for a couple to live?
Well, it depends how strong the relationship is because there's only one room.
It's either going to be a deal sealer or a deal wrecker. Is that what you're saying?
I think the idea is that we're just starting with kind of the smallest room in our system. So it's 20 by 20. And the initial configuration of that is a kitchen bathroom. So then probably in this factory, we'll do other 20 by 20s with different interior configurations. And then eventually we'll go on to bigger boxes like 20 by 30, 20 by 40, 20 by 60, at which point you have a really big room. And when you start stacking, connecting, customize that, you can do a lot. But our houses are really durable because we're not using the traditional building methods that you'd see in most of North America, which is wood, nails, lumber framing. If you've ever driven by a job site, we're actually using totally different stuff. And we think it results in a better building. And that means we're outperforming on energy ratings, fire resistance, water resistance. For example, the interior of the unit, if it gets wet, basically it's going to dry off, you're going to clean it, and it's going to be fine. You're not going to end up with damaged sheetrock or rotting wood like you would in a traditional house.
Wow.
The idea, you would place the order, we would ship them out, you would have a site ready to go where you would connect utilities to them, and that's pretty much it because all the work's kind of done in the factory. So the kitchen, the bathroom, the electrical, the plumbing, the windows, flooring, all of that is done in the factory before it arrives, and that's what's really important about our concept is that not only are we able to finish everything on an assembly line where it's efficient and we can use automation and have high quality and low cost, but we're also still able to ship it affordably. And that's been the roadblock for existing factory-built housing that's been around for many years. It's so expensive for them to ship the buildings because they ship these wide loads that are essentially illegal loads. So the costs are huge, and then they can never ship them far from the factory, and then they can never scale the manufacturing. So they can never really get the efficiencies that you would like to see at a modern factory.
From the investor perspective now, you raised money through Regulation A originally, correct?
We applied with the SEC to get qualified on the Regulation A about 18 months ago, and it's been a grueling process, but finally, the Friday before last, we got qualified on that. And in just about a week, we've brought in $20 million on that one, so it's going very well. And then before the Regulation A, we were raising on Reg D, 506C, and also we did the Reg CF, which allows you to raise $5 million. So before that Reg A, we've closed on about $55 million. So it's really pretty significant as far as crowdfunding goes. And I think a lot of people are really interested in what we're doing. They understand how big of an opportunity this is, how big the market is for this, because it's just, absolutely massive. If we're able to kind of change the way buildings are built all around the world, this is a multi-trillion-dollar opportunity, and it's just amazing. And things are going well for us, and we keep kind of hitting all these milestones. So we're getting a lot of buzz and a lot of excitement.
Mm-hmm. What's the furthest distance for a unit that you've sold that somebody's living in right now?
The initial units that we're selling to the government initially got trucked all the way to Florida. So pretty much as far as you can go across the country, and it still made sense for them. So that was an interesting example. We've also driven them to Washington, D.C. before. We've also driven them actually to Canada. One of the early prototypes that we built, we actually built in Canada. That was a few years ago, though.
I imagine you're going to have several different manufacturing sites as you grow.
We're starting out here in this current building that I'm in right now that's behind me. It's 170,000 feet. We think we can produce probably 10 houses a day here. We've got a few hundred employees right now, and then we're looking forward towards a next factory. So part of what we're planning to use the funds that we're raising for is another factory. And I'm not even talking about another factory this big. I'm talking about something hopefully at least 10 times bigger than this, where we can get, real economies of scale, where we can get significant automation, where we can have, a huge amount of bulk purchasing power and just all the benefits that you get on an efficient factory. So one example I like to use is the automobile makers. So whether it's like Ford or Tesla, these factories put out one car per minute. So we think that our technology will enable us to put out one house per minute. And if we can achieve that, I feel like it's game over, and we've won at that point. Because right now no one can really build enough housing fast enough, and there's just huge demand for it in the market.
So you've raised $20 million in your first month of the Reg A offering?
First week.
I gotta say, of all the Reg A deals I've ever heard of, that's unprecedented. That's the best I've ever heard of. What do you attribute that success to?
Early on, I kind of figured out how to use social media marketing properly. Like at first I was targeting like traditional press, and then I had someone do a YouTube video for me and saw just great results, like a lot more interest, a lot more emails, a lot more web traffic. And so I said, all right, let's double down on this. And I kept going after social media marketing, and it ended up just becoming a numbers game, getting enough people to see what we were doing. And then also the video we have where the house unfolds, that ended up just going viral a lot organically, because people saw it and they stopped and they watched it and they thought it was cool. So really, we just built up a huge amount of interest. We captured all those leads on the website, and then we remarketed to those leads. So, over this 18 months, while we've been waiting for the SEC to qualify our offering, we've just been, capturing leads, and now we're advertising to them and letting them know, all right, the time has come.
Great to hear that things are going well. Appreciate your time as usual, and we will put that link, if you shoot it to us, in the description of the video, and I'll look forward to talking to you again very soon.
Good stuff. Thank you so much. Have a good day. Appreciate you having me on the show.
Of course. Thanks, Galiano. Bye for now. Let's start with a quick look at some markets here, some charts. So the S&P is up a little bit today. Dow Jones is up a little bit today. This is the power of the Fed jawboning. NASDAQ is up slightly today. But as you can see, it's been very volatile over the last week. Gold is up, flirting with $2,000 an ounce again. Silver up at $25.76. Everything in the alternative asset class rising strongly. Copper, $469.50, down slightly. That would be the negative impact of the rising interest rate environment on housing, which directly impacts the demand for copper. The U.S. 10-year up at $266. And what else? Lumber, way down, $862. That's suggestive of a drop in demand from housing again in the U.S. as a result of rising interest rates. So lots of interesting stuff happening. The VIX gauge of fear and loathing has started to rise again, going into this expectation that the Fed is going to come out with a 50 basis point rise. Bank of Canada, same thing, expected to raise the interest rate in Canada by 50 basis points. So, commodities looking like the best game in town in many respects. If we take a look at tin holding strong at $43,000 per ton. Natural gas rising strongly, going into this expectation that the Russian invasion of Ukraine is going to cause extreme supply-demand imbalances in Europe as Europe seeks to wean itself off of Russian natural gas. Price of lithium, as ever, rising strongly, now at over $80,000 per ton. It seems like every week we talk about lithium, it's up another $5,000, $6,000 per ton. Now, this does not mean that battery manufacturers are paying $80,000 per ton of lithium. This is the forward price projection, though the contract price of lithium is rising. So new entrants into the sector are paying $20,000 to $30,000 per ton. as per my interview with Jonathan Evans from Lithium Americas last week, which you can find on our site if you didn't get a chance to catch that. But lithium cobalt. Cobalt is also, trending higher, $39,000 per ton, up from $24,000 per ton. That is not expected to change. The price of wheat also starting to rise again after the sell-off after the big spike caused by the onset of the war. But the price is rising again as it doesn't look like the war is going to be resolved anytime soon. And so the Ukrainian and Russian contributions to the global wheat supply side are not expected to be fully present, especially in Ukraine. Won't be present at all. In Russia, likely will be highly diminished because of the diversion of manpower into the war effort in the Ukraine. What else can I tell you? The price of tin, the price of lithium, the price of nickel has started to rise again as the Joe Biden has announced that certain materials are going to be added to the Wartime Production Measures Act, and that should see more investment. They've been deemed critical metals now, so you're going to see more money coming into the nickel space, though it's really established this new normal here at $24.85 per ton, and that's not expected to go anywhere but up. Bitcoin, which had been taking lumps heavily in the cryptocurrency space, now has reversed and is looking like it's going strongly the other direction right now. This largely in response to the inflation numbers. The crypto segment is interested in portraying crypto as an alternative asset currency, and there's lots of the media that supports that delusion. However, it will never be an alternative currency asset because it's just not stable. And nor will it ever be stable because of the huge amount of new entrants due to the low barriers of entry. So, there's just more and more cryptocurrencies every day, every time you turn around. Increasingly, there's increased amounts of fraud and scams and crypto used to pay for criminal enterprises. And so despite what you're seeing in the mainstream, I saw an article, I think it was in Newsweek, suggesting that that crypto was trying to be the new alternative reserve currency. And I thought that was irresponsible reporting because desire does not make a strong argument for likelihood. So we'll see, but you know my position on crypto. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Also joining us today is James Willoughby. James is the market analyst for the International Tin Association. James Willoughby joins me now. He's the market analyst for the International Tin Association. James, welcome.
Thank you very much.
James, quick overview. What is the International Tin Association's mandate?
Yeah, so we are a membership organization that is really designed to promote tin in general. We have a membership made up of the world's largest tin producers, but we're here to help promote tin use, investment in tin, sustainability, things like that.
Most people hear about tin, they automatically default to the tin can. And while some cans still contain tin, if I'm not mistaken, the majority of the use of tin is elsewhere and is particularly relevant in the electrification of the world as it pertains to circuit boards. So how is tin used and where is it most in demand?
Yeah, you're exactly right. I think most people do still think of tin as, in your can of baked beans and that sort of thing. But actually that tin plate use is now the third largest use of tin globally. Tin's major use is in solder, which you're right, is what is sort of the glue that holds together all of the world's electronics. So that's tin's major use. That's about half of all tin use. And, there's a variety of other end use sectors, such as chemicals, which go into sort of your plastics, and your pipes on your house, some in glass as well. Tin plate, as I mentioned, it's used in lead acid batteries for your car. There's a whole a whole wide range of uses of tin, which is why some people call it the spice element, because you need a little bit in everything.
Then what do the supply-demand metrics look like that have justified tripling of the commodity price of tin in the last 10 years?
Yeah, it's been pretty amazing run for the tin price, not only in the last 10 years, but particularly in sort of the last year or two. Really, the tin market, about 10 years ago was relatively stable. You were looking at a market with supply and demand of about 360,000 tons, relatively small compared to your coppers, your nickels, your aluminiums. But that's really growing at the moment quite strongly. We're coming out of a period of sort of flattish demand growth into a new era, if you will, where demand growth looks like it's going to be somewhere around 3-4%, but supply really isn't keeping up. So the price, as you might expect, is really rushing higher to encourage that new supply.
CAGR, compound annual growth rate, is 3 to 4% for tin demand?
Going forward, we believe it's going to accelerate to that. Over the last maybe 50 years or so, it's been averaging about 1.8 to 2%. So you're looking at maybe doubling the annual growth rate.
Does the supply side of tin have the same sort of incline?
Definitely not. We are looking at quite a significant undersupply unless we really get new investment into tin supply.
It sounds like there's a shortage of tin on the horizon. How possible is it that electronics manufacturers could replace tin in the process of gluing together circuit boards?
It's definitely a question we get asked a lot, especially, after the price has risen so much. I think it's very difficult to replace tin in circuit boards. At sort of a very basic level, it's going to take companies, quite a long time to redesign all of your electronics. You would have to redesign all of your computers, phones, cars, everything would need to be, changed to use some new connection method. But in sort of very basic terms, there doesn't seem to be a metal that quite has the same properties as tin for those connections. People have tried things like silver, copper, different conductive adhesives, things like this, but they're all only good for very niche connections under very certain conditions, whereas tin can really do it all. And in terms of a price perspective, you're looking at maybe 1 gram of tin in your iPhone. So for someone that's, making all of these electronics devices, the change in the price really doesn't matter too much to them. You're looking at very minimal unit increases. So there's not too much reason for them to redesign everything.
Who is the leading provider of finished tin in the form of solder to the electronics industry?
In terms of a country, China produces most of the world's solder. In general tin use terms, China is about half of the market, and half of its consumption is in solder. And that's where a lot of the electronics manufacturing in the world is. So yeah, a lot of it is based over there.
Are you seeing a lot more investment coming into the tin mining side of things at this point?
We're definitely starting to see interest and investment picking up. Over the last decade, perhaps 2 decades, we've only seen a handful of tin mines come online, bringing with them maybe 15,000 tons of new supply. And really that hasn't kept up with declines in other, historical mines that have been slowing over the same period. But that is now picking up. We are seeing much more investment going into tin mines. The exploration sector is really accelerating, and we're hopeful that that trend will continue so that we can really close that supply gap that we're seeing over the next 5-10 years.
Is the processing of tin into solder a highly impactful on global emissions?
In terms of the processing of tin, it's a relatively simple process. For a lot of tin mines, all you really have to do is crush the rock, simply filter it using gravity, and out comes your cassiterite, which is the tin containing mineral. And then it's a very simple smelting process to get that into the form of metal, which is basically just extruded into solder wire, slightly more complex to get your solder paste, which goes into your sort of high-end electronics. But relatively, the sort of processing chain is quite simple compared to other base metals.
So let's say I have a tin mine in Brazil. Who do I sell my tin to?
You'd sell it to one of the local Brazilian tin smelters, probably. If the market was particularly oversupplied in Brazil, you might ship it into Southeast Asia. But the tin smelting market in Brazil is quite large.
Are the participants in that market members of the International Tin Association?
We do have 2 Brazilian members. We have Toboca, which is a subsidiary of the Peruvian producer Minsa. And we also have White Solder, who recently joined the association.
In terms of other uses for tin, do they have demand increasing over the near term, or is it stable, or what's that look like?
So for most of the other tin uses, we see them as relatively stable markets. But of course, there are other potential uses of tin that could be coming in over the next decade or so that could be really exciting. So one that we're watching very carefully at the moment is in solar power. So within your larger solar panel, you have cells which are all connected with a ribbon, which is essentially a flattened copper wire coated in tin. And that uses quite a lot of tin. So for every gigawatt of solar power that you're adding to your grid, you need about 75 tons of tin. So that's a very exciting new use for the tin market. And there are more uses in R&D as well. There are potential uses for tin in lithium-ion batteries in electric vehicles, for example, which could be very beneficial to the tin market as well. And this goes sort of above and beyond that 3-4% growth rate that I mentioned already. This sort of lithium-ion battery story is really an addition to that.
So what is the current price of tin in the commodities market in the forward month, for example?
Yeah, so the sort of main contract 3-month price is about $43,500 a ton right now. That is up quite a lot in the last year and a half. Before really all of the sort of COVID pandemic took off, tin averaged around $20,000 a ton. So you're looking at maybe 2 times the price at the moment in the current market.
And what about the origins of tin? I know that 5% of the world's tin comes from the DRC, the Democratic Republic of Congo, for example. And are there issues around the concept of conflict tin?
Yeah, so quite a lot of tin does come from the DRC and Central Africa as well. The majority of that now comes from Alphamin's Pissier mine. They have traceability built into their mine, so they track all of their production from initial blasting all the way through to the smelter and beyond. And indeed, with a lot of the other mines in Africa, they also have traceability schemes as well. The major one is ITSCI, which was developed by the International Tin Association to deal with these conflict minerals issues. This is a bagging and tagging exercise. So at the mine, they will bag up all of their tin concentrate. They'll weigh it, tag it, and at every step of the supply chain, it will be weighed and checked to make sure there's been no tampering with it, and to make sure that none of the funds go towards funding conflict. So really, it's quite a good situation now. With ITSCI, with other traceability schemes in place in Africa. We really feel like the tin industry is on top of the sort of conflict minerals situation.
Okay, great. James, we're going to leave it there for now. That's an excellent overview of the tin market. We will come back to you in due course and hope to see that price keep rising. Thanks for your time today.
Thanks very much.
If you're wondering, Tin Association, what has James gotten himself into now? Tin has tripled in price since the last 10 years, and tin is growing at 4% per year compound annual growth rate, while supply is growing at less than 1% per year. So the price of tin is going to start to emulate the price of lithium very closely. And if you're wondering why the price of lithium is so high, well, you'd have to have your head in the sand deeply not to see what's going on. The amount of electric vehicles being brought to market in the next 10 years implies a 100% increase in demand for lithium over the next 10 years. In fact, the demand for lithium is expected to double in 5 years and double again in 10 years, if not quadruple. And so lithium is very much one of the hot topics, but the thing that holds all of the circuit boards in every electric vehicle together is the solder in circuit boards, which is made from tin. So also tin is going to be used increasingly in solar panels. So the future for Bright on the demand side is extremely runaway large, and on the supply side is extremely tight due to underinvestment over the last 10 years. So our focus for 2022, as I said till I'm blue in the face or red in the face by the looks of this camera, it's going to be all about the battery metals. I mean, I think we're going to see some real negative economic news, and markets are going to be extremely volatile as they try to price in the Fed rate increases while simultaneously withdrawing stimulus. So that's going to keep things choppy. I think tech stocks are going to fall right out of bed and revalue to the downside by probably 20% in 2022. That's my personal projection. While mining companies who are focused on the battery metals are going to increase. And that's largely because Joe Biden has indicated that he is going to put a lot more of the battery metals under the Defense Production Act, which will see investment flow to mining companies in the US for domestic production. In Canada, Trudeau has already committed $2 billion to more production of battery metals. So now let's cut to our interview with Jim Albertelli from Voxtur Analytics. Here's Jim. Jim Albertelli joins me now. He's the CEO of Voxtur Analytics, trading on the TSX Venture under the symbol VXT, and in the United States under the symbol VXTRF. Jim, welcome back.
Hey, good to be with you. Thank you for having me.
You bet. Jim, so big news lately with Fannie Mae coming out and approving these attorney opinion letters, and correct me if I'm wrong, Voxtur's the only game in town who can actually provide them right now.
Yeah, so that's absolutely correct. We worked for the past 3 years with the prior administration, with the Biden administration, FHFA, and the GSEs, Fannie and Freddie, really looking at what could move the needle for home ownership and reduce the cost without increasing the risk at all to the homeowner. And the title insurance industry was ripe for innovation, and so. We created the technology. Voxtur has the technology that allows for the scaling and the production of an attorney opinion letter with some unique qualities that allow that opinion to go for the entire life of the loan between transferor and transferee, and that's the special sauce. That's why really lawyers couldn't do it before. They couldn't work at scale. They didn't have access to the technology to be able to do a an appropriate professional job based on all the factors. So there's no way to assimilate all the information in one spot. Our technology does that. It dual factor authenticates and protects the person when they go in, when an attorney goes into that environment. It tees up questions and answers based on data, so it matches the question to the data. So a lot of that process was created by the Voxtur technology, and it was the culmination of my expertise of over 25 years as being a practicing lawyer, the technical chops of Voxtur's technical team being able to put it together, and then the understanding of the transfer process, so we could have a unique insurance wrapper that surrounds our product. And we, like I said, we've been working on this for 3 years. We've lined up the carriers, we lined up the work, we lined up the technology, put it all together, and so we're uniquely situated to take advantage of this position. And so now it's up to us to build scale. We've had almost every tier 1 top 10 lender in North America approach us. It's super important. As you know, rates are up, right? So rates are going up. The cost of housing is at one of its all-time peaks. Wages are eroding under inflation. So if you can find a way to reduce the cost and make our lender partners more competitive in marketplaces, saving on average of between $1,000 and $2,000 for the average house in many jurisdictions, then you've really, really touched a key piece.
What kind of revenue picture does this add to the Voxtur overall revenue picture just on these attorney opinion letters? What's the size of this market opportunity?
Look, title insurance industry is a multi-billion-dollar industry. These guidelines haven't changed for 76 years. Voxtur did it. We gave people the confidence to do it. So you talk about, to your investors, why invest in the company? And you and I would talk about walls and moats. And I said, well, we have, I've had over 25 years of relationships with major financial institutions in the U.S. Gary has even longer history building multinational companies. Gary Yeoman, our executive chairman, and in the tax space, the ICA space, he created Altus, as we know. So we have that. We have the MSAs, those master services agreements you and I talked about before. That's your stickiness. You get the MSA, it takes 1 to 2 years. You're vetted, you're audited by financial companies. It's not like another startup. I mean, it's not like another micro cap or small cap company. We've had to have the institutional rigor to stand up to audits of major financial institutions. So that's another wall or moat. Then we have IP. We filed a process patent around the AOL. We've got patent around our valuation technology and the digitized workflow. We have intellectual property around our real property tax analytics, which is being deployed in Canada and the US. So that's another wall or moat. And then we have first mover advantage. So you're going to see us now really, really building scale and attacking this market with all the vim and vigor and doing the other things we told you about, which was, you land and expand. People love organic growth. Organic growth, two factors: innovation's organic, and then really being able to bundle our services. Come in with the AOL and save your consumer $1,000. You've got to do a valuation anyway. Here we are. Why not use a great product like one of our valuation services? Or why not buy data from us and we'll reduce the cost of your data, and you can do that to help mine leads. Now you mine leads more effectively, and you have a lower cost basis, means you do more loans. That's innovation. That's what Voxtur's doing.
The process of distribution of this product is through your lending partners.
Well, yeah, it's going to be through a number of channels, right? So Voxtur has the tech-enabled service component in its title group to do the settlement service and to use Voxtur's technology to deploy and put this out. So maybe the first, I'll call it 1,000 units, 2,000 units. Those are our kind of our test case units where we control everything, right? We're testing, we're delivering, we're going back to our clients, and we can maintain a low-cost basis. What we'll do then is we will take our technology and we'll license it to other title companies. Who knows? We might license it to First American or Old Republic or someone else, or we might license it to large independent title agents so that they can use it. And they can use that technology as one arrow in their quiver to be more competitive. So I imagine, large financial institutions like multiple settlement providers, 2-3 different companies doing it, gives them redundancy, protects them from some risk. We'll be the engine behind all three. and maybe we'll be one of the vendors and do a little bit of the work. But really, we're a software as a service company. We want to connect to the data elements and let the other folks sell it, let them compete, and we'll be the technology behind the scene. And hopefully, we'll capture the largest part of that 1 million units a month, right?
Yeah. So in the current environment where it's obvious, interest rates are going to go up. They're going to go up hard. Inflation's broken 8.5% in the U.S. There's a contingent of my audience who says, oh, well, that's bad for Voxtur. And in fact, it's the opposite, as you, I'm sure, could explain better than I.
When the mortgage market over the past 2 years was so busy, with where basically anybody could be a loan officer, loans would come in off the street, and you'd give someone a refinance, right? Very little brain damage. It was a cost savings for everybody. So that's not very tough, right? So nobody wanted to innovate. If you're the biggest mortgage lenders in this country, you're Rocket Mortgage or Wells Fargo Mortgage or someone else, you're drinking from a fire hose. You're not going to cut anybody's costs. You have no incentive to cut the cost. Why would you do that? You're not going to use a new process. Why take any risk? You don't need to take any risk. It's only in an environment where the market constricts and the rate this way through rates and the pricing, where people really look around and go, wait a second. Instead of laying these people off, I need to get more competitive. What is out there in the industry that's new? What's different? What can we do? Oh, well, now leads don't just show up and knock on our door and say, can I have a mortgage? Now we got to be more thoughtful. Who has the data that could mine this for leads for us and deploy it effectively? Oh, that'd be Voxtur. Okay, well, now I've got the lead in the door, but everybody's got the same rate. Now, how am I going to be more competitive? How am I going to reduce my cost? Oh, wait a second. I could use the Voxtur's AOL and I could save my client $1,000. So if my company offers this loan and another company offers a loan, Voxtur's is $1,000 less. You don't care where the money comes from. Money's fungible. You'll tip the bank with the lower cost. You go, oh, $1,000 less. I'm going to go with Bank of America or with Wells Fargo. So I think that this environment that we're in is a tremendous opportunity of growth for Voxtur. No one was paying attention. Now everybody's paying attention. And by the way, the other piece that you and we never get to it because because it hadn't been as material is that Voxtur also has technology that manages bankruptcies and foreclosures, has a default component to it. So you're going to have. That's why I say I think that this is like a tale of two cities, except it's like the best of times and the better of times. It really is. We got this business going where people want to innovate. We're going to innovate, reduce the cost of home ownership. To the extent the moratorium go off, we have an opportunity to perform there as well. So you've got both of the cylinders, really moving. And I think the smart money, people who get it, look at Voxtur and say, wait a second, these guys have figured it out. And really, I think we've got a long road to hoe, a long way to go to realize our dream of really changing the mortgage ecosystem and helping homeowners. And we have a lot more to do to reduce costs, and we're going to keep doing it.
You bet. All right, Jim, fantastic update as usual. We'll leave it there for now and come back in the future. And thanks for joining us.
All right, love it. Thank you.
You bet. There's the chart on Voxtur coming out of the chute. Look at that, $1.42. So this stock has literally doubled from where we started covering it back here in 2021. We first talked to Jim Albertelli. The stock was right down here, 70 cents. And so the stock has doubled and then some in the last year. And with this advent of the attorney opinion letter, I think we're going to see it continue to appreciate. We have a conflict, a bias with Voxtur. A company in which I have a 50% interest has an option on 1 million shares at $1.15 a share. So now we're in the money by $300,000. So we've made good money with Voxtur, but our intention is not to sell anytime soon. Between myself and the owners of the company, our target is at least $5 a share, if not $10 a share. And again, I can say that because we're no longer under contract with Voxtur. That's my opinion. My opinion is obviously colored by the fact that I have upside exposure to the share price. But so far in the last year, we've been proven rather correct about that. So expect to see more of that. if we look at Voxtur's main competitor in the US space, it's a company called Doma. And Doma has been going in the opposite direction. It seems the more Voxtur appreciates, the more Doma depreciates. And that's because I have been inserting the Voxtur story into the Doma foundational investor circles. Actually, one of the early investors was a company called Foundation Capital. And I told them when their stock was back here at $5 a share, $6 a share, that they should invest in Voxtur, if for no other reason than they're the better mousetrap in the mix. Doma also does title and automated title insurance and is seeking to compete directly with Voxtur in automating the end-to-end real estate transactional process. However, Voxtur's way further ahead, and there was a point at which Voxtur might have bought Doma for the big treasury, but I don't see that happening. And I think that Doma might end up selling itself to Voxtur at a discount, and Voxtur might be interested in their client base, but certainly not likely in any of their technological components, because Voxtur is so far ahead in that respect. So this is why I believe Doma is collapsing so much, is because Voxtur is accelerating into their potential market share so significantly. But enough about that. What are the other big movers and shakers stories this week? Twitter, wow, what a volatile story that's become since Elon Musk threw his 2 cents into the ring and became a 10% shareholder. First he's going to join the board, now he's not going to join the board. He's going to roll out his vision for Twitter, now he's not going to roll out his vision for Twitter, which I guess makes him an activist shareholder with 10%. Largest private shareholder outside of Jack Dorsey, I guess. So that's a story, but since he rescinded his desire to be on the board, the Twitter stock has started to appreciate. So I guess that's the Elon Musk effect on the upside just by throwing in money. But we'll see what happens. That's my show for today. If you are celebrating Easter, I wish you a happy Easter holiday. If you get a day off just because it's a stat holiday, let's party. It's Easter. It's Easter. And to all the other religions around the world, enjoy your day off or whatever you get because of Easter. And we'll see you next week. Thanks for joining me.